Morning, folks. Glad to be back with you. Got a fun show for you today. Tariffs? Who talks about tariffs anymore? Interest rates? They're not going lower. But what matters is earnings. And we got earnings from the big boys. Kind of a mixed bag, but spoos don't care. Only concentrating on the good ones. Microsoft, Meta, Amazon, and Google instigate some wild price action, which we will cover for you here on pre-market prep. Ratings, not so much today. Anne-Marie Baiynd at 8:35. Get her take on the markets. Folks, it's Thursday. I'm fired up for pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right. These charts that we are looking at right now are brought to you by TradeStation Securities. Trade smarter, move faster, and stay in control with the platform that is built for serious traders and traders that want to put some AI into their trading. Well, you see the net result here, banging on the door of an all-time high. Spoos up 27 handles, 71.95. The buck, let's take a look at the buck here. The buck consolidating, finding major resistance at 99. We're down 62 cents at 98.21. TLT at the low of the move. Ooh, I guess we broke out of that triangle to the downside. I'll have to erase that. We're up a nickel, 85.75. USO blasting off yesterday, coming back down today, down $4 at 146.61. GLD up 780, still making lower highs. And we're at 425.23. SLV lower highs as well, up $1.72, 66.56. And Bitcoin didn't move much over the last few days. We're up $525 at 76,300. Let's bring in Triple D to the conversation. And Dennis, how are you on this April 30th?
I'm doing well, and I'm doing so much better now that you're back here, Joel. Let's hit the like button for him. He is back. We all make less money when Joel leaves. When Joel comes back, the markets go up. When Joel comes back, we can efficiently trade. When Joel comes back, he gives us all his technical analysis levels, which help us trade as well. So what I have fully decided here as of today is you are no longer allowed to go on vacations. We are banning vacations. Stock Trader Network is now saying Joel Elconin can no longer go on vacations because the market is too weak when you leave. And then obviously you come back this morning and look right away. Like, what time did you come back? Because here's a good question. Because, let's just put this under the thesis here. Because last night on the big Meg 7, Microsoft was down and Meta was down and then Amazon was down and Google was going down. The S&Ps were falling. I bet you came back around like 5:30 p.m. last night. And that's when the market started to turn around. The S&Ps ramping up. What time did you come back last night? Was it exactly 5:30 p.m. last night?
No, actually, no. And everyone get your pens and pencils out here, okay? I came back early in the morning, okay? And I got to listen to pre-market prep on the airplane.
Ooh, nice.
Pre-market prep and in STN. But Dennis, the man that adapts trading strategies, the man that's always nimble. If you know I'm going out of town and you know the market goes down, why the hell are you going long every night, not hedging properly? And then when the spoos drop 20 handles in the morning, you're like, oh, Joel's going to market.
I blame Joel. As soon as I read my P&L, I right away blame Joel. Brentster knows, though. Bring him in here. The Brentster knows I'm right.
I'm cracking up.
Yeah, I'm losing money. It's Joel's fault. It's never my fault.
Oh, it's not because you're wrong.
Fault. I was going to title the show It's Joel's Fault, but, we had to go with the earnings because earnings, and it is earnings galore here. So, okay. Bottom line, yes, I could take some of the stuff you're saying, and maybe, just maybe next time I'll go short when you leave. But when is your next vacation? That's what we need to know. When are you gone? You can't.
We'll talk later on today.
It's like next week. It's like next week. We have breaking news. Before we get to the earnings here, the Brentster breaking news trumps all, 8 a.m. here. We got a headline drop. It's not car, it's Hertz.
Oh, Hertz and Uber announcing a partnership for autonomous robotaxi and driver-led fleet operations. Hertz shares are moving on this. Were they? They were.
Yeah, no, they are. They're still up a buck here, so Hertz is going, but it's come off. Is that no? There you go.
Yeah,
there you go.
printed
There you
over
go.
740.
Down to 650, pulling back here a little bit, but the algos get all antsy in their pantsy and they buy it up like $1 bazillion in the first 3 seconds, and then it starts to come in as human beings saying, "No, that's stupid." Did you see Carr since you've been gone, Joel? Before we go into the Hertz.
Yeah.
The bubble has officially burst. I'm not going to blame you for this one because it burst before you left, but it didn't get any better. So, we go from $822 or $47 down to $181 in 6 days, giving the entire rally back basically. So now we have Hertz, and we've been not talking about Hertz, and maybe it'll catch up, maybe catching up with it or not. This is a nice deal for Hertz, good deal, but market's saying, we buy it up, and the humans are saying sell a little bit. What are your thoughts here? First Carr, then Hertz.
For Carr, here are my thoughts. Let's look at the Hertz chart. Hertz, you had a nice rally. Man, a lot of people are stuck on this. That's all I could say, because you were going with the car. People buying all the way down. Yeah. Now you get a 91-cent pop up to 742. I don't know. What do you do if you got stuck in this rally here? Because I don't think you're getting your money back for a long time. So I would first thing I would do is I'll take a look at the 50% retracement, which is probably, I don't really need to get my tool out for that. You had a 250 move, 7.25. I'd be palms out at 7.25, even in that pre-market rip. So look at that. A lot of people getting their money back. I don't know how long this deal is going to be. it seems like Uber partners with everybody, don't they?
Doesn't it?
Yeah.
I think totally. You're correct. There's a lot of partnerships happening.
Fleet partnership, you call that. Yes, there's a bunch of them.
Yeah, so no special deal for this car. It's just absolutely, I don't know what to say. You could lose money on the long side. You got absolutely creamed on the short side. Maybe it stopped going down. Dennis talked about 90, but you did hit the 200-day at 158. So maybe some consolidation.
I was hoping to buy it at 95. I didn't have a lot of hope that I was going to get all the way down there and give 100% of it back, but it gave 90% of it back here. Okay, so let's go to it. Earnings. Last night we get the big four within a 5-minute period. I have never seen that before. So they usually have them 2, 1, 2. Meaning Tuesday we get a couple, then we get Meta sandwiched in the middle on the Wednesday, and then the Thursday we get Apple, Amazon. They did all four within 5 minutes. Microsoft, Meta, Google, and Amazon. The S&Ps didn't know what the hell to do. So they drop, about 15 handles, then they rally 40 handles, then they come all the way back in, and then they're all just chopping around, and they're still chopping around. They don't know how to handle it. It was intense for Brentster as he was breaking this in the STN think tank, all these earnings. I don't even know where you want to start. We got to cover them all. So dealer's choice to Joel, Microsoft, Meta, Google, Amazon, they all basically dropped between 4 and 405 last night. We've got a couple disasters. We got a couple that are,
let's go bad, good, bad, good.
Bad is Meta. Good. Let's start with the bad. Meta continues to leak here, and it is ugly. Down over almost 10% here now. Brentster, give us the details.
So the quarter was fine. They reported $731 in earnings. Analysts were under $680. Sales $56.3 billion. Analysts were at $55.5 billion. But the guidance wasn't really impressive. They are expecting Q2 sales $58 billion to $61 billion. Analysts are around $59 billion. So kind of like in line to light there. They did raise their CapEx guidance for 2026. They were previously at 115 to 135 billion. They raised it about 10 billion, now at 125 to 145 billion. Meta shares trading down a pretty substantial 9% this morning.
Bring up that pre-market chart because it's just been a steady leak all night long. This is just, not really got much of a bounce at all. It got the big whoosh. They tried to buy the dip a little bit there, but it's just been leaking, and it continues to leak like it looks like down here to 600, down 10%. I mean, their earnings, like you were saying, didn't look that bad here, but they are punishing the stock. So I'm not sure, if that's, the CapEx spend, which, obviously they're concerned about here as well. JP Morgan downgrading Meta on limited visibility into their AI product pipeline. You got to think Zuck's cooking some stuff up. So one thing I will say is Meta could benefit greatly from the AI efficiency trade. Meta also probably is cooking some pretty cool things up. I do think there's going to be competition longer term from other social media platforms getting launched because there's just so many people that can build so quickly here now. But short term here, is it a buy the dip, Joel? I'm going to throw it to you.
No. I mean, if you got jammed short here, then maybe. But as far as looking for a long here, no, not today. Not today. You got a step down seller. They took a little break before the 8 p.m. close last night. Then they came back. We are beyond the expected move here by about $13. So you can now use that as resistance. And you're coming into no man's land here. I'll just give you the next daily low at 591.83. And then there's a gap to fill here to 575. Maybe not today, but I think you came down. You'll settle, find some support perhaps in this area. Maybe not test the low of the move. But I think what's more important in this one is look at the rally that you had back. And I put up the 50 and the 200 day before I left. And look at that. It rallied all the way back to the 200, hung out there. You could see there were pesky sellers, if you want to use it. And now what, back down. The other thing was, I was thinking about was the key word for algos was CapEx. Like, what's CapEx? Remember last earnings? They came out with the good earnings and they're like, but the CapEx is this. Where's the return on this CapEx? Where's it going? What are they doing with it?
But they were scared. They were very scared. And Oracle got punished the most. Oracle was the first one that really got punished for this, and then obviously it started to spread. But, intern was asking the question, Meta gets hit on CapEx spend, but Amazon and Microsoft have been talking about their CapEx spend going up to Amazon severely as well. Why the pass for Amazon? There's a good question there. I don't know if I know the answer to it.
Yeah.
This market just gets its favorites and then it doesn't, and at Meta, which is still significantly off of its all-time highs, stock hit $796 way back in July of last year. And, we're a long ways off from there. And, get stocks that are hitting all-time highs, they want to go higher. Like, I think it might just be that easy. Blue skies equals, we give them a pass on certain things. So maybe that's the answer to your question here. Maybe there's something deeper in the fundamentals here, but we're surface fundamentals on this show. Obviously, looking at the technicals a little bit farther here.
I could throw something out on that.
Please.
Google and Amazon are much more diversified companies
than Meta.
In my opinion. Yeah,
it's not the worst thought. Yeah,
it's a good thought actually.
Yeah,
for sure.
Yeah, that's a good.
I mean, just thinking about Amazon. Amazon really started rallying. So bring that report up here.
Okay.
Amazon really started rallying when they started talking about chips, when they started talking about, the chip production. I mean, Amazon's getting into everything again. They always do. I mean, let's think about the history of the Amazon company. They started as an online bookstore, and they realized that wasn't going to work because of pets.com. And they're like, well, we don't want to be the next pets.com. So they start going out a little bit further. And they became the online retailer for everything. And, that was a great idea. And now, obviously they've just moved into cloud, moved into, Amazon's just in everything now. So chips, yeah, they're talking that too. They talk a little bit of everything. Brentster, give us the details here.
Quarter was really strong. Guidance was really strong. Amazon reporting 278 versus $1.66 estimate. Sales beating by around $4 billion, 181 billion versus 177 billion estimate. They're expecting Q2 sales in the range of 194 billion to 199 billion. Analysts are down under 190 billion for Amazon shares this morning, trading up about 4%.
Okay. Super nice move. Eclipsing the all-time high, former all-time high, 265.91. We'll use that as support since that was made in yesterday's session. If you're looking for the high to sell the pre-market high, 277.12, that's $5 away. A lot of times when you see a high like that, a significant pullback, people kind of reset, recalibrate what they're trying to, what level you want to, they want to exit. So I would just go back and look at some of those 15-minute bar highs. But I think it's easier to pick out the downside and support at 265.91. That would be for Amazon. Just one hell of a move. And watch your offers, Dennis, because we just are drifting.
We
higher.
can't
They're
stop.
not ripping
Joel,
higher.
you're back. You're in the seat here. There's no stopping this market. If you're coming in today short, you're not listening to Joel Elconin indicator whatsoever here. There's no stopping it. Oil's down too. I mean, oil goes up. USO goes up like $10 yesterday. The S&Ps couldn't care less. But oil goes down $5. The S&Ps are going to rally. There was an article you wrote. I'm going to go on a little tangent here.
Oh, here we go.
But I've got to tie this in here.
Okay.
And Joel Elconin, the guru that he is, when we launched pre-market prep way back in like 2013, he wrote this article. And the hot thing back in 2014, this was April 2nd, 2014. Look at the date of this. The hot thing was Michael Lewis's new book. It was Flash Boys and how the market is rigged. Joel wrote the counter article to Michael Lewis' book, and he called it, if you go back up to the top there, Michael Lewis. Lewis is right. The market is rigged to the upside. Oh my gosh. 2014. This may have been one of the best calls ever. This might be better than the Mark Haynes bottom that CNBC always talks about there. Because Joel Elconin gives all of his arguments why you have to own stocks in this article from 2014. 12 years later, we know what the markets have done. They've gone straight up. There basically hasn't even been a bear market except for the little hiccup during COVID here. But just read a few of these, highlights here, Brentster, if you can. Give us some highlights from this article. Joel Elconin was all over this. He really sums it up back at the bottom of the article.
Okay.
Because he talks about the Lewis stuff. Who cares about that stuff? What we care about is, what was happening there. Simply put, go to this last paragraph. I can read it there. Simply put. I like it when I read an article and it says simply put. That's what you need. Simply put, the Fed is printing money and pumping it into the economy, keeping interest rates artificially low. And with all money being flushed into the economy, it has to find a place to go. With bonds and treasury yields not keeping up with inflation, this money has nowhere to go except for the stock market. Oh my gosh, you were so right. The bonds have underperformed. Cash has massively underperformed since 2014, and the stock market has just kicked butt. Joel, that actually flying under the hood might be one of your best calls ever.
Well, thank you. Thank you.
I'll just,
what
I
a
don't even
genius.
have a retort.
I'm
just going to accept
blushing.
the compliment and move on.
I'm
what a
blushing
genius.
right
It
now.
is so true. We should have just stopped everything back then and just, listen to Mr. Elconin here, and we all could have been retired by now. Unfortunately, I trade too much and didn't hold enough of my stocks. Joel, on the other hand, held all of his stocks, thanks to Lisa, and he's allowed to go on vacation every other week because he can afford to. Because he read that article and he read the Michael Lewis book and then decided that it wasn't the market structure that he was worried about. It was the fact that the Fed just continued to pump money in the economy. And we have wars coming. So you think Trump's guy is not going to be a little more accommodated than Powell?
We don't
Could be
know.
like Helicopter Ben all over again.
I don't know.
Helicopter Ben? Just flying around, dropping $100 bills to everybody in the world or everybody in the U.S. Just, a little bit for you, a little bit for you. Could be the same thing.
I mean, with what this market done, I don't even know if I could write another article about this market because the circumstances and what's going on in this market are totally uncorrelated. And you have to trade what's in front of you, see what's in front of you. And I mean, they don't care. I mean, I've heard you say they don't care about oil. Don't care. I mean, don't care about oil. I mean, it's down today. That's good. Market, oil goes up, market comes down a little bit, Oil goes down, market goes up a lot. I mean, it's very hard to do it. We're ripping now. We're getting some good earnings, right? This is what we were waiting for.
Yes.
Yeah.
Totally.
The party continues. And the party
Yeah.
continues here back to earnings season because we're
Yeah.
on a little bit of tangent there. I mean, so we started with Meta, the bad. We touched on Amazon, which is kind of the good. The real good is Google. And Google is the one that is up 27 points here now, making new all-time highs. Google's the one that kind of started this party with Gemini to a certain extent, but they've kind of been a little bit of a disruptor doing other things as well here. How'd Google do?
Oops. Google also started the party like chronologically last night. Google did very well. Earnings, I see over $5. Analysts were under $3. Sales around 110 billion. Analysts were around 107 billion. They also raised their dividend. The thing that I was noting, and like a little bit of calling back to Amazon and Meta also, and maybe that CapEx number question. Some of these companies just aren't very convincing with their language. This is something that I realized last night reading the Meta release. And Meta, they have a quote from Mark Zuckerberg, and he's talking about AI, but it's just like very generic. Like they're not giving, some of these companies are giving a lot of insight into what they want to do with AI. And some of these companies like Meta, I think like Microsoft, very much like Microsoft, they're just like saying keywords. They're not actually giving the market any information about where they're going with AI. And I think that's all the market is asking for.
More color. Tell us, just tell us where this money is.
Show
tell
us.
And maybe, it's Amazon, maybe Amazon is more, and Google is more transparent here. Meta, maybe they're working on some really cool things, but they're not telling us much. Microsoft, which we can go to that report right after too, isn't telling us a lot at all. So I want to get to that color there too. First, do the technicals on Google, Joel, and then we'll cover Microsoft as well.
Wow, you're above the expected move. You're bumping up against the highs of the pre-market session. You're at all-time highs. You're busting out. Unless you had a target in the 375 handle, I mean, what do you do with this? What, 375? Get you 400 here? So I just look at the pre-market high of 375.76. If you feel the need that you have to sell today, then just put your numbers out at half and whole numbers, see where you get lifted, see where people join you. That's really the only thing you can do on this. But, just going back to Google, and you said this, before I left, I remember talking about it. I mean, Bard, was not
start.
much. They went back at it, right, with Gemini.
Yeah.
Obviously advertising, is, it's not going to be able to maintain all that market share, but they're maintaining a good part of their market share. Like TV and like YouTube, I mean, come on, what a buy.
Google's done so many things well.
Yes.
Google's done so many things well. And Mitch making a good point here too, just talking about, the AI CapEx spend here. And, it's paying off for Google. Google talking about, and I can just read it, massive $600 billion AI investment spree, evidenced by explosive growth. Highlight Google's cloud record-shattering 63% surge in Google Cloud. So, I mean, they just do a lot of things. Google just does a lot of things right. They always have. And, think back, and you just think to what they were too. I mean, here are companies that, just, reinvent themselves. Because Google, originally was, okay, well, you got Yahoo and you had all these search engines, and all Google did was come on and perfect search. But, they knew search, in the last, 4 to 5 years was not going to be, as cash cow as much. So what they've done is they've moved this business into everything else here as well. Obviously cloud, but, talking about, moving away just, into, where we've gone with Gemini. So they know, we can't have everybody using ChatGPT. So they come with Gemini. It's fantastic as well. And I mean, now you got the big three there. You obviously have Anthropic, Gemini, and you have ChatGPT. But I mean, when ChatGPT, remember that moment as well. So it wasn't just the Bard moment, but with ChatGPT, and then Bard came out and gave the wrong answer. I think about what Google has done since then. Call that the Bard bottom, because that was the bottom of the move here. And if you were betting against Google, you're betting wrong. And I think it just goes back to show you, buy good companies at reasonable valuations, and you want the companies that know how to manage. And this is what obviously Google has done very well, is they've managed their environment, and they can see where the puck is going, as opposed to where the puck currently is.
I like that term, the Bard bottom.
The Bard bottom. Was it Bart or Bard? It was Bard, right?
Bard, B-A-R-D. Yeah.
B-A-R-D. Bard.
And I think it was right here. Correct me if I'm wrong, but if the weeklies are indicating this, it was
Yeah.
like around
It might
200.
have been before that. I might have been 2024 even, Joel. I bet you it was 2024. I bet we're going off farther.
I really? Okay.
I don't know. It's hard. Years fly by when you're this old, Joel. I'm turning 50 this year. You know, they all kind of mesh together here. So you could be right. It feels like it was in the last
I
couple of
mean,
years.
there's if it you're you know what? I think you
I
might
feel like it was 2024, but maybe it was
yeah.
2025.
Well, here, but then what? Then we came down in 25 for some reason. We got hammered in 2025 too.
Just
I
goes to
think
show you, every dip on Google's been another buying opportunity.
Yep.
Even the recent one we just had. We just got a dip like 1 week ago, 2 weeks ago. Well, 3 weeks ago, I guess now. Okay, last one, Microsoft, Mr. Softy. And we know Mr. Softy is the one that's out of favor. We talked about this in the STN think tank, and I was saying if this thing pops, probably going to be met with sellers. Oh, did it pop? Oh, did it pop? And oh, did it drop? Those buyers did not last long.
Quarter was not great. They beat, but it was like pretty unimpressive. They reported earnings of 427. Analysts were around 410, so not a huge beat there. Sales 82.9 billion. Analysts were at 81.4 billion. Microsoft chose to give their guidance not in the investor relations or the press release. They chose to give it during the call. When they gave that guidance on the call, it was around 6 p.m., I believe. They said they're expecting next quarter sales 86.7 to 87.8 billion, and analysts are at 87.5 billion. So pretty unimpressive, even lighter than expected Q4 guidance for Microsoft. Now that we have our big four names that we've covered, might be a good time for me to bring up this stat that everyone's going to be sharing today. They're already sharing it, that the combined CapEx for these four big tech names generating into AI is over $700 billion for this year alone.
I mean, they're spending money, and we've seen Amazon do this before. Amazon is the best at spending money in the right places. Maybe jury's out for Zuck, maybe jury's out for Microsoft here, but one thing I can tell you is that Amazon for years, the stock rallied because they were spending money in the right places. They've always been focused on growth first, the top line first, and then the bottom line will work itself out. So, I mean, they're not afraid to spend. They've never been afraid to spend. And if anybody you're going to bet on that's going to spend in the right places, it's going to be Amazon. And maybe that's why Amazon's making new all-time highs. Full disclosure, is still one of the biggest positions in my long-term portfolio, getting bigger every day. So that's the Amazon story. The Microsoft story, unfortunately, is not nearly as good. It is software. It is, tried to go up a couple of times here tonight, like last night and even this morning. Those rips have been met with more sellers here. I'm still concerned that we have this whole hardware versus software thing going on. I don't think that goes away. I think, the market is telling you that as well, with IGB significantly off its all-time highs, where the NASDAQ's making new all-time highs, and the SMH has just been rip-roaring and rallying every single day. So I just think it's that simple. I'm staying away from software still, even though if I was buying software, Microsoft, is still best of breed. And if anybody's going to figure out, it's probably Microsoft. But why even go there? Why even try to go there?
Be a hero.
Yeah.
Fun to be a hero, but it's not the best way to make money.
Interesting here, because you're way under the expected move here, if I'm pulling this up correctly. So that I think you just got to look at this. Is this a pullback to buy or not? And the Netflix report, I'm just using that as they came out, they gave you the report, they didn't like it, and it continued to leak. Microsoft, which has been out of favor, right, had a big rally. It's starting out, it's only at 420 here. So let's look at yesterday's low. For real short-term traders here, it crushed yesterday's low, but it came back. But we'll use that as your first reference point. Below 420, I think you're kind of picking and choosing your daily levels, because there's no one place. But if this does off this report and over the next couple days, if it doesn't give a lot of this move back, let's say go 395, 400, something like this, then I think you're preparing for another leg up. If you get like to continue selling, we're down 4 today, we're down 8 tomorrow, we have unchanged, and then you come down. But I'm surprised that this is not down more off that report. And just use the close as resistance. That's the mark for everyone at 424.46. We've traded above and below it, but I would be just off the report and what you guys are saying, I would expect it to be down more. It was down more, but the buy the dippers came in. So here's a quick look. Amazon.
Joe, please pull up the SPY chart. We did just get some 8:30 data. We got PCE prices on a month-over-month basis up 0.7%. That was right in line. We also got our first preliminary reading for Q1 GDP within the U.S. It was up 2%. Economists were expecting a 2.2% gain. We also got jobless claims. Folks, we aren't prioritizing the data here, for better or for worse, because it's not really moving the markets.
No.
So I very much appreciate in the chat that you guys are giving us a heads up. Just wanted to explain why we're not stopping the show and breaking in here.
No, and that's just it. We prioritize what's moving price. That's why we stopped talking about the war. You can talk oil all you want. USO went up $10 yesterday, and the SPY couldn't care less. So, that's where we are. So we've got to talk about what moves markets. Right now, it's all about AI. It's all about chips. That's all the stock market cares about. Doesn't care about, that oil USO is making new highs. Pulls back a little bit today. Stock market goes up, like the rig to the upside thing. But, this is stock market moving up, not because oil is down. It's moving up because we've got some major companies like Google and Amazon, up significantly here this morning as well. And then the chips are just flying again, which I haven't talked about. Micron moving up here again here. Going through them all. SanDisk, which is going to report earnings here tonight, is up another 42 points. So the chips just continue to drive the bus.
We are leaking. There is a leak. I'm not going to say it's a major leak, but you did match an intraday high from a few days ago at 11.25. You went to 11.5, and you pulled back a whopping 7 handles, Dennis. 7 handles. I will caution with the overnight range that we've had, because we traded down basically to Wednesday's low. With the volatility coming down a little bit, we hit the high. It was our average expected range. So you're going to need some more giddy up to get back to that all-time high. I believe that was made, if I have my numbers correctly, on Monday. We're only 20 handles away from it, but you did define a few sellers here off that number. And you know what? When the market cares about inflation, when the market cares about oil, when the market cares is when we'll care. It doesn't care.
Doesn't care.
It
doesn't care. So Claude, when you're grading our show here today and they say you didn't spend enough money on the economic analysis here, Claude, we don't care about the economic numbers because they don't matter.
Wait.
Not right now.
Here. I'm warming up to Claude.
On the grading system?
Yeah.
It never gives us a passing grade. It grades every show. So we have it automatically break down a report card for every show that we give on pre-market prep.
Wait.
Why are you warming up to it?
Yeah. It said, without Joel,
it's just not as good.
The show was okay.
Did it say that?
Yeah.
It said like that. It said like the two other guys sort of held the energy together without.
Did it say that?
Yeah.
Yes.
The other guys. It's like the show kind of sucks without Joel. Not gonna lie to you.
Yeah.
Claude doesn't lie at all. Like it is brutally honest with us. So
it gave you
this Claude
some props.
grader is killing me, man.
It gave you some props. I love the headline. Like I saw Brett in the Slack, talking about the Alice Cooper market, and I'm like, and I didn't have I wasn't following the Twitter and all. And I'm like, I got to figure this out. I got to figure out why Brad's calling this. But can I just say one thing about AI?
No,
there's no AI in Utah.
There's no AI in Utah. They have shut the world. They have shut the rest of the world
off. It's just beautiful. If you haven't been to Arches or Canyonlands, you got to go. Dennis, I'm making you go. Just unbelievable land. I'm still shocked by it. I've been to a lot of national parks. I've never seen anything more beautiful, more just geologically just blowing your mind. I have done my last daredevil hiking move, though.
What'd you do?
Oh,
Have you ever, hey Brent, can you pull up delicate arch? And can you perhaps bring that up? The delicate arch is
whoa.
it's about a 3.5 mile hike. You go, about 1 point, whatever each way, but the last like 3/4 a mile is like kind of straight up on rock, right? And okay, so the last part, go blow up the second one.
Pretty cool.
This one?
Blow up the second one.
Okay.
Okay, so this last part here, doggy. So I climbed up all the way to the top here, then across, then here, and then I was standing in that arch.
Looks like you're gonna fall off
Wow.
that cliff. Don't fall off that cliff. The cliff's
Yeah.
right there.
And so
That's
there's no
dangerous.
AI there. You guys got to go
Joel,
out and see
I
the
don't-
world. Get away from your computer. Get away from Claude.
Now you're making me mad that you're sitting on cliffs. Like, we cannot afford you to die. Like, I just got done telling you can't even go on vacation. We can't have you falling off that cliff there. So you got to be more careful here. No more daredevil experience.
Lisa was she was like, there's like 100 people out there, and she's like yelling at me, and I'm like, she's like, and I'm like, I'm trying to concentrate, and she was like, Paul, be careful. And she was like sweating. She didn't even want to take out her iPhone because she was sitting in a different place. She didn't even want to take out her iPhone to take a picture with her phone. She did get some other pictures, which I'll share with you. But folks, get out of your cave. Go do stuff. Get out. AI. There's other things to do. So I'm sorry.
Joel.
We're going into Anne-Marie's
Anne-Marie.
here.
No, we keep Anne-Marie overtime anyways because we love Anne-Marie. Run that guest intro. I need some Anne-Marie band on my life.
Anne-Marie Band, are you thinking of changing your name to something like your middle name to something with an I? So it would be
AI band. AI band.
Don't make me laugh at my own jokes. Okay.
That'd be
Listen,
good.
the best jokes are when you laugh at your own ones. I just gotta say, this is what I tell myself.
All right. I don't know where to start here in the market because the market doesn't care about war. The market doesn't care about inflation. It doesn't care that interest rates aren't going up. I mean, and being a trader, if you're not fading, you're not trading. I mean, should we just be fading here and just selling into this, or is just the momentum of the upside too strong?
That's super interesting. What I noticed last week was, and I felt it in myself, and I was talking to all the other traders that I work with, and we got news fatigue. It was just so exhausting and I'm outside in the woods here visiting my daughter. If you're like, what are all these noises? So anyway,
bear. Anne-Marie, look out for the bear.
There are no bears, and there's no bears in Utah either. There's no bears. There's no rabbits. There's no water.
So what I noticed was news fatigue setting in, and it started dampening these moves, just like the ones you talked about. We don't care about X. We don't care about Y. We're just sort of trying to focus right back in to stocks and what their earnings are saying and what they're doing. So this little news fatigue is why I think, hey, nobody cares about what that is. They'll care later whenever the volatility begins to expand again. But Joel, you brought up something super interesting. If you're looking at all these highs moving up, what you want to see is volume going with those new highs. And we're not. And so we're seeing a little bit of volume, but it is not expanding in the way that healthy moves to the upside should be. And we've got cross currents of moving averages where people really feel, hey, this market should be going down. We're going to have stagflation. People are just going crazy and setting up those hedges and trying to to fade the market, where everybody else, the other group, is saying, no, listen, it's great. We're hammering on all cylinders, and they are really in conflict. But here's what I noticed. Big money has not moved the put walls up. They're still way down. I mean, the put walls in the ES shifted by 100 points over the last week.
Could you explain that a little bit
Okay,
in more detail?
let me show you.
Okay.
Yeah, let me show you. Okay, whoopsie. Sorry.
I feel like I'm still on vacation. Well, actually, there's not really any birds in Utah.
I love the birds in the background.
I remember how your birds.
And you've calmed me down so much here. Like, it's therapeutic here just having Anne-Marie on the show. I'm like, feel relaxed. I'm calm. I mean, I just, need more Anne-Marie in my life because, I'm hyper and I'm going off the walls and I'm bouncing here. And my wife would be like, calm down. You're hyper again. Those birds in the background, that's killing it.
I probably should record it and take it with me.
For real.
But, yeah. So if we just take a look at general flow on these moves up, we can see a lot of motion here. But here's what I'm talking about with the walls. And so we'll go to the Analyze tab and we will look at the closing for the month. Where is that? 3-week 18th. Isn't it the 18th? Or is that
because we're in a short month here.
So is it the 15th or the 18th?
15th is the 15th.
Yeah, I think it's the 15th.
Yeah, it's the shortest you can get.
We've got, of course, these guys sold their 2100 short puts a long time ago, so those things are going to expire. But we've got walls that still 4,900, 4,950, 5,000, and then the big one is we've got one at 5,500, and then 6,000. These walls are very far below what we expect. And so when the put walls sit in for this expiration month, what we really are seeing is traders saying, you know what? I'm not moving these walls up. I am not selling close to where price action is right now. It's too dangerous. See, there's nothing moving in here. Very, very small numbers. You get further out, they're okay to put the orders on, but they are very nervous about positioning with a lot of upside pressure, saying, let's just walk that put wall up. So that's all it means. It's just a line of defense, and they're not moving that defense line up. They are holding steady in the background.
Joel's on mute
All
here.
right, first mute. What about call wall? Is there any?
So,
I know
call wall is at 7,200. The call wall is at 7,200, and it's not moving up, right? And so if the call wall's not moving up at 7,200, where it's sitting, they're jamming it right now. So my suspicion, if I were to think about what's going on here, is notice the fade in volume on the continued action up. Selling bars still higher than buying bars in general. And so they are looking towards exhaustion. Trend is up, yes. Momentum is also divergent. Here is the momentum event. It's also divergent. So everything is saying all the accelerations to the upside are looking for a resistance, that terminal flow event where all they do is hit supply. So
when's that happen? What causes that to happen? Like, how in the heck? because it's just, there's obviously, we've been climbing this wall of worry here for the last month, and it's like relentless. Like it won't even back down. It's like every little dip, we get like a 20-point fall in the S&Ps, and they got to come and start buying them right away, even on the earnings last night. What causes traders to like say, whoa, okay, now, we got to take some caution. Now we got to de-risk a bit, because I'm just not seeing, all I'm seeing out there is FOMO.
And you know what? You're absolutely right. Here's the interesting thing. You know how Brian Shannon says, if the market doesn't wear you out, it'll scare you out?
Yes.
And I think that is really, we're in a wearing out of the space. Notice how sideways this range is, essentially. Notice how many of the candlesticks are retracing their bodies. Yes, we are grinding up, but what I see, especially from institutional traders, is they are positioning for upside. They're going long tech, they're going long energy in terms of what's giving. They're going long certain levels in the commodities. They're buying every dip. But what ends up happening is that they are hedging with downward flow. So they're saying, hey, let's go long tech, let's go long XYZ, let's go. So when it moves, we will participate, but let's buy those hedges. Because if something happens, it's going to buffer that pain. We're going to be able to take it off and then add more positioning to the upside. Because as you guys read, which I love the hat tip to Joel, obviously from Claude, but also from that note from 2014, the market is hedged to the upside. We can't even possibly deny that.
No.
It is rigged to that upside event. So yes, they're going to keep us landlocked. I would not be surprised if we stay landlocked for another month. But we do have this downward flow where we are going to regulate. I don't see any massive drops that make us clutch our stomachs because the hedging is so well placed.
Anne-Marie, I got to ask you the big question for tonight. Apple's going to report here. And obviously we've got Microsoft, Meta, Google, and Amazon. This is kind of, NVIDIA we get in a few weeks, but this is like the one that's going to be on everybody's radar here tonight. Apple's been a funny stock here, and I want to get your thoughts on it because, we've sold off. We're not back at all-time highs on Apple, but we're not far from there. Still trading with a little lofty valuation, almost 30 times earnings here, but a hardware play. It's what are your thoughts here just as we approach Apple's earnings here tonight at 4:30?
Well, everybody's singing Tim Cook's praises as he turns over the reins. Well, most everybody. And to be sure, the chart has done some beautiful things. And the problem is, if we stare this down, if we stare what we're looking at, we really are seeing a sideways bog since September of 2025. And so as we're sitting in this range, we can see this is an earnings candle here, and then an earnings candle here. And now we're going to have an earnings candle here. Tell me what Apple has done materially in the last XYZ. Okay, we got a new version of a phone. Ooh, that's awesome.
Better camera.
We got a better camera.
Memory.
Ooh, we got some more memory. Ooh, we signed deals. They're hedging, so they're signing deals with Gemini and OpenAI to figure out the AI thing. So they're choosing sides. They've left Anthropic alone for now, and they're going with OpenAI and Google's Gemini. But what are we really seeing? What's materially changed? If they come out and say, hey, we've got something dramatic, great. But I bet you there are a lot of Apple traders that are just exhausted from this sideways move. And if it gets to the top of that edge, they're going to go, see ya, I'm out of here. And so my suspicion is that if Apple bounces, I'm going to give it a couple of days. And if it loses the low of the candle of the earnings candle. I love this type of formation. It works really, really great. If it breaks the high of the earnings candle, you take the trade long and take it into exhaustion by a measured move. Just draw Fibonacci on that earnings candle response. If it heads below, draw a Fibonacci and you get to trade it down. We're going to do the same thing here. I'm going to look for it to either break above it so I can take it long, or break below it so I can run back down. What's my gut? My gut is it gets up to 280. All of these guys going, when is this chart going to move? They're going to go, I'm out of here. What do you think?
Man, it's I'm looking at the weekly, and I thought it have had more movement. It got the Trump bump, and then it just kind of it has been in a trading range, and the highs have come in lower. So we'll see what it does after its report. All right, Anne-Marie, thanks for joining us. Anne-Marie Baiynd, you all know her. Anne-Marie trades, a favorite here on Pre-Market Prep. We will be bringing you back real soon. Thanks again, Anne-Marie.
Thanks, guys.
Thanks, Anne-Marie.
Pullback, major pullback here. I did notice the volume.
We got the three-point S&P pullback here. This is the dip to buy.
Will you go to the SPY chart, Joel, or the ES chart, Joel, please?
Okay. There we go. We got our pullback here.
Oh, there's a pullback. All right, here we go.
Look at that dip. It's so violent.
Woo!
Woo!
Wow, I can't even handle it.
Right,
we have a lot of earnings here. We should skip
earnings.
ratings here. The only one of note is Teradyne did catch an upgrade here from JP Morgan, so they are buying the dip on that semiconductor stock here this morning, and it is up 20 points here on that upgrade, obviously bouncing back with chips as well. But there are so many earnings to cover here that I just want to jump into Caterpillar right away, because it's up 51 points here. CAT, new all-time highs. The picks and shovels play here. Big scoop, for the data centers continues to go. Caterpillar numbers here, Mr. Brunster.
Really strong report. They reported Q1 earnings of 554. Analysts were at 460. Sales beating by almost $1 billion at 17.4 billion. Analysts were looking for around 16.6 billion. Let me just double check to see if they had any guidance in the release. I don't think they gave guidance, which I don't think is that crazy or anything. I don't remember if they especially give guidance.
Stock, Joel, Cat. We'll fly through these. We'll do like one a minute.
I'll just give you the pre-market high, and then you guys can decide if you want to sell at your pre-market high. Pre-market high, 869.
I want to go back to last night, Qualcomm, which we didn't have a chance to cover here this morning. This stock was absolutely wild. It fell $11 on the initial report, and then they decided to stop buying it, and they could not stop buying it here. Give us the details here, Mr. Slava.
Quarter was good, 265 in earnings versus 256 estimate. Sales 10.6 billion. That's where analysts were. The guidance wasn't great though. They're looking for next quarter. That's Q3 earnings 210 to 230. Analysts up at 245 for sales for next quarter. Qualcomm expecting $9.2 to $10 billion. Analysts are up closer to 10.3 billion. We heard a comment. Let me see if I can find it here real quick. We heard a comment, I believe it was in the company's press release, that the company is going to host an investor day on June 24th, and they are going to be announcing a custom silicon engagement with a leading hyperscaler to begin shipping later in 2026. We had one of our users in STN that was pointing out he thought maybe this is why the market digesting this little piece of info is why the stock rebounded. I'm unsure of that. I don't know if I was convinced of that, but I wanted to mention that comment here on Qualcomm. Shares this morning trading up 11%. Is that right? Wow.
Yeah. It's just been on, it's on fire here this morning. Here, still long Qualcomm in my long-term portfolio. Ford. Okay. It was good. It was up huge, and just is a stock that they just don't like. And when you get, these stocks in really hard downtrends, when they rip up on earnings, they're more of selling opportunities and buying opportunities. The Ford sellers came in hard. It hit up to 13.20, which was up. It was up over $1 here. So like 8%. Now it is down. So couldn't hold the gains overnight, and obviously is continuing to leak here now this morning. So it's ugly here. How was the report? And then I want to get some technicals from Joel.
Report was, as far as I can tell, really strong. They reported adjusted earnings at 66 cents. Analysts were looking for just 20 cents. I'm not sure the discrepancy there, but sales also was really strong. They reported sales just under 40 billion, and analysts were looking for under 39 billion. Ford shares down 4% this morning, despite that solid report.
Low price stock, but man, the technical set up for you pretty well on this one. Look at you, poked your head above 13 4 times since March. 4 times, right? That means you just got a gargantuan seller, 13 and above. They're out there. They're not going anywhere. You take it to 13.20 in the pre-market, and they're slamming bids. That's exactly that's the upside. The downside is, man, you're coming to fill this gap, which was a triple top at 1162, 1163. You already did that in the pre-market. I mean, if buyers don't step up here in Ford at 1150, 1160, then they're never going to step up. That's what I'd say on this one here. I mean, big action, both sides. Let's see if it can find support above the low of the move here for Ford. And GM popped and dropped, right? Is that what GM did off its report?
Yeah.
Okay.
Yeah.
Okay.
And that's what we saw the same thing. So, history doesn't repeat itself, but often rhymes. Mark Twain and our own Ryan Dietrich. Carvana, let's go to this one. CVNA from last night. Wild stock, wild earnings. The stock was up huge. Again, we're seeing sellers come in. I mean, is it just this simple that, if you're not like an AI sexy, type of name, like that, or picks and shovels or something related to, like, Caterpillar holds on because, man, it's AI. I mean, Carvana's not really AI. Ford is definitely not AI, probably anti-AI, if anything here. I mean, is it getting to be that simple where we just sell the violent rips on the non-AI stuff? Carvana getting sold here too.
Yeah.
How about, go ahead, Joe.
Now give me the report. I'd like to see the report on this.
I do too.
Report was fine. They reported adjusted earnings $1.69, $1.69. Analysts were at $1.50. Sales $6.4 billion. Analysts were around $6 billion. Their retail units sold was up 40% on a year-over-year basis for the quarter. For next quarter, for Q2, they said, assuming the environment remains stable, Carvana expects a sequential increase in both retail units sold and adjusted EBITDA. The company remains on track to deliver significant growth in both retail units sold and adjusted EBITDA in 2026. Kind of some generic guidance, but, I think the street thought it was fine guidance here for Carvana.
Blasted over to 440. I'm just going to look at this area that we traded up to a couple weeks ago. We traded up to, no, we're trading above that. We're trading above 417. So you're gapping up above the high of the move. You stay above 417, then we can look for 427. They blew through that in the pre-market. I mean, it's holding on here. I wouldn't be worried about this stock on the downside until you took out this 397 level, 5 bottoms in a row, and it hasn't even sniffed that straight up in the after hours. Don't really get this one.
Okay, last one, RCL. Give us the earnings here. I'll give my commentary.
Earnings were mixed. They beat on the bottom line, but they missed on the sales. Sales $4.45 billion. Analysts were looking for $4.46 billion. Earnings were $360 versus a $320 estimate. Their Q2 guidance was not great. They're expecting earnings $3.83 to $3.93. Analysts are over $4. And then their 2026 guidance, they actually cut. They cut about 50 or 60 cents. The new range for earnings is $17.10 to $17.50. Analysts are around $17.20 for RCL. Again, mixed report, not good guidance. Shares are up this morning about 6% or so.
Nice pop, just relief rally here. Stock's been really hit hard, low bar. I mean, it's come off, $100. Obviously, this is ground zero for oil. The issue I have, though, is it doesn't look like oil prices are coming down anytime soon, and this is a huge expense. So I can't get on board with chasing this up 6% and say the bottom is imminent here. I mean, sales, are a little bit light here. I mean, the bottom line is not going to get better if oil stays up. So it's just such a huge expense here. So we need oil to start coming back down. These are just inversely correlated. If oil tanks, we get the war, this can pop up. But basically, this is one of your perfect inverted trades with oil.
Ah, boy, made a new low for the recent move yesterday, popping up. I know we got to 276, but I'll just focus on this 272 high. It's a little bit more relevant above 472. This will be the bar question, the big down day. But, we talk about, stocks not caring about oil. Well, this stock cares about oil. There it is. I mean,
for sure. Airlines and cruise lines care about oil. Maybe everything else can. Maybe everything else can go on the AI trade. Airlines and cruise lines cannot. And that's why you're seeing these stocks all break down here. This, if you want to trade, the inversion with oil, it's this. If oil tanks, these stocks are going to go up. If oil continues to rise, these stocks are probably going to go down.
And prices are probably not getting any cheaper on the cruises, right? I mean, the oil, the inflation, the food and everything. Yeah. So I could never really explain this move when RCL was giving you great news after great news, great guidance. We're raising, and then boom, that was back in this area. And now trying to find the bottom. Actually, the low from yesterday, 250.38, $20 above it.
That's the end of the show, folks. It's past 9 a.m. We even went a couple minutes over here.
Yeah, you guys are wearing me out the first day back here, but great to be back here at the battle for 7,200 all-time high. It's within scope here at 72.22 1/4. That's wrapping up the show for today. We're gonna get Greg. We're gonna get Louis Sykes. Louis Sykes is on tomorrow. Louis with his accent, and he's going to let us know what is going on. What the heck's that? The Pacific Ocean out there? He's going to talk to us about crypto and what's going on over there in New Zealand, folks. Great to be back with you. If I said I missed you, I guess I did.
You missed me the most. You missed me the most.
I miss getting picked on, but Lisa picked up the slack a little bit. So.
Thanks, Lisa. Doing my job for me.
All right, folks. Thanks for joining us on PreMarket Pro.